Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bearish scenario where we are looking for a 5-wave leading diagonal to the downside in a wave A or 1, followed by a 3-wave corrective structure to the upside in a wave B or 2, and then one more move to the downside to take out the low of A or 1 with either a wave C or a wave 3. The common target for your wave 2 is between the 0.5 and the 0.786 Fibonacci taken from the start to the end of your wave 1, giving you a target between 70.2k and 72.2k. The target area for wave B is a little bit bigger, between the 0.382 and the 886, 69.4k to 72.8k. The 382 is also a target for a wave 2, it is just less common. As you can see, we have not yet reached these fibs, so we would be looking still for a bit more upside to come. What is important is that this wave B or 2 is going to be a 3-wave corrective structure. If price would move towards the upside in a straight line, we would be looking for more bullish scenarios and price to take out this high, the invalidation of this scenario at 73.6k. It is most common after a diagonal to look for zigzag family structure, so let's say a 535 simple zigzag, an ABC, or a double zigzag with an a W, X and a wave Y. If we then look at the bullish scenario, then in the bullish scenario we have to count this move to the downside as a corrective structure, and in all of the scenarios the invalidation is taking out this low at 66.7k. Now you can see that I have 3 different counts on my chart, a red, a blue and a yellow one, and I want to shortly go through one by one and explain why the probabilities are not that great for each of these scenarios. First of all, the W, X, Y, X, Z, triple zigzag. So you need a zigzag in W, then you have X, zigzag in a wave Y, another X, and a zigzag in a wave Z. A triple zigzag is quite simply incredibly rare, is never preferred unless everything else fails. Then we go to the blue count. In the blue count we then have a 3-wave structure in a wave W, and then we have our wave X over here. In this scenario, your wave X is then a running flat, 3-wave A, 3-wave B, a 5-wave C. Now, a running flat is also, again, very rare, never preferred, unless everything else fails. But it is a scenario nonetheless. So you have a 3-wave zigzag here in your A, look for a zigzag in B, 5-wave C. And also this wave C is then an expanding diagonal, which then again is never preferred unless all the other stuff fails. So also, therefore, this scenario has low probabilities, but it is a scenario we have to keep in mind. And if you do take a Fibonacci from the start to the end of A in a flat to the end of your wave B, then you can see that price hit the 0.618, which is a target for a wave C in a running flat at least. And then we have the red count, and the red count is again a zigzag structure down in a wave W. Then we have this zigzag structure to the upside in a wave X, and now this whole structure here to the downside is a wave Y. This is then a double zigzag, W, X, and then you have your wave Y. But inside wave Y, we need a zigzag, which means this has to be a 5-wave, 3-wave, and another 5-wave. However, if you go to the lower time frame counts of these moves to the downside, counting this as a single 5-waver and counting this as a single 5-waver is actually very challenging. If this is a 5-wave structure, you would need to count this as a wave 1, 2, 3, 4, 5. However, the issue you then have is that you have overlap here between either the low of wave 1 and the high of wave 4, which isn't allowed in an impulse, or this price action over here is a wave B of a flat A, B, and then a wave C. But then again, this is a running flat, which is very rare locally, and it is in the guidelines of Elliott waves. It's called a strong guideline, is that the price action of a wave 2 is not allowed to overlap with wave 4. So it's not a rule, but it is a strong guideline, and therefore also something that we can't prefer in this particular scenario. So counting a 5-wave move down here makes it very difficult to give higher probabilities to this scenario. Same is true with this move to the downside. It counts well as a wave A, B, and then a 5-wave move to the downside in C. If this was an impulse, we actually wanted to see a 1, 2, 1, 2, 3, 4, 5, 4, 5, but we never got an extra 4, 5. So you can see that the probabilities for each individual scenario that I have here on my chart aren't too great compared to the more bearish scenario, where we're then looking for a wave 2 or a wave B, but still in both of the cases, we preferably still look for price to move to the upside, because in the bearish scenario, you want price to move into the fibs, which hasn't yet been done. If we then look at the CVD divergences, then the price made the low over here very, very nicely on the support box. We were talking about it over here. We had the monthly naked point of control, weekly naked point of control as well, the range value area low of this range over here. Nice area of support, just missed out on hitting it, but we identified that this move to the downside or to the upside here was a low probability impulsive structure, increasing probabilities to take the low, and that happened. So now price has moved here to the upside together with some bullish CVD divergences locally, which is good to see as well. At the moment though, these bullish CVDs played out. There's nothing going on locally, so we need to wait for a bit of a range to form, as price so far has only really moved towards the upside here locally. We also have news today. Yes, Tuesday, November 5th. We have news at 4 p.m, but of course, we also have the presidential election. I will be live today on YouTube. I'm pretty much always live in the afternoon, Central European time anyway. I will keep an eye on the chart and the volatility, try to be there whenever something happens. But you can expect me to be live in the afternoon and then potentially live again in the evening as well, depending on what price does with regards to the news as well. But make sure you trade safe, because it can increase the volatility. And if we then look at the probabilities of the different scenarios, then at the moment, the probabilities here of the structure to the downside are higher for the bearish diagonal, followed by a wave B or 2, and then a wave C or 3 to the downside, compared to the bullish WXYXZ or the two WXYs that I explained based on the analysis that I've shown you as well. Now, in both of the cases, however, we preferably still look for price to move to the upside for a B or 2, at least in these fibs, which hasn't yet happened. We have to be aware that wave B or 2 has to be a 3-wave structure, not a 5-wave impulsive structure and just continue to the upside. So of course, what we are eventually looking for is a nice 3-wave range. And if we then also look at the time, so we take a fib time here from the start to the end of A or 1, and we toggle on the 3A2, then preferably this wave B or 2 would be finished after the 7th of November, 6 a.m. Central European time. So preferably we're going to be going sideways in a wave B or 2 for a couple of days, right? And not just pump towards the upside and then boom, straight down again, or just continue to the upside, right? If we go up too fast, too quick, right, it lowers the probabilities for B or 2, but at the moment, from an Elliott wave point of view, the probabilities are highest for this scenario compared to the arguably more bullish scenario where you look for a 3-wave corrective structure to the downside. That being said, I hope that this video was helpful or valuable to you. Please check out the CVD indicator video, the best indicator out there in my opinion, or the Elliott Wave educational playlist to help you understand more about Elliott waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.